Feels like a Monday, but it's a Tuesday here in Nigeria and around the world. But it's the first business and markets day for us, where we finished off on Friday, went on the weekend, added Monday as a Muslim holiday, then we're back to full business. But for those who are getting into the city and you want to move around, you expect what you see right now, a lot of vehicular traffic snarl around the city as everyone comes down into the city this morning, moving around for the business week, trying to make the best of the remaining 4 days of the current business and market week. So let's get the show started here on Business Morning on Nigeria's news leader, Channels Television. I am Bosin Awafai. It's good to have everyone here on the show this morning. Let's get started. As a new World Bank enterprise study that says some 322 Nigerian firms closed down their operations between 2009 and 2014. That's a 5-year period. And the reason was simple. The operating environment was too hot or difficult or harsh for them. That's part of the stories you find in the newspapers as you get today's business day underway, getting down to your various business desks and try to digest what is in the news. Meantime, the president of the Egypt-based Africa Export-Import Bank, Dr. Benedict Oramah, has told West African countries to deploy technology for their border monitoring rather than resort to border closure. Dr. Oramah was speaking at the ongoing 3-day Africa Investment Forum put together by the EFDB Group in Johannesburg, South Africa. Dr. Oramah says he's hopeful that Nigeria will reopen its closed land borders with its neighbors in the sub-region before the formal takeoff of the AfCFTA, that's the Africa Continental Free Trade Area Agreement, in 2020. Stepping into the market street, the Nigerian Stock Exchange last week admitted 2 savings bonds issued on the 16th of October by the Debt Management Office. The first was the 11.244%. That's the yield on that FG savings bond matured in October 2021. The amount was for 145.872 million naira. The due date is what you see there, 16th October 2021. The second paper issued by the debt office listed on the NSE was the 12.244% FGS October 2022, and the amount was much bigger than the first one. That's 401.539 million naira. That's due October 2022. And so the market has a lot to digest today as we get the trading day started. But in case you spend most of your weekend labor visits, folks and families, and take some time out for leisure, let's give you a sense of where we finished off on Friday, and Temple Ashaju is doing that a little bit for us. Then we got to talk a little bit more about some of the issues in the news as we get the new week started. Temple Ashaju, live to us from studios at the Nigerian Stock Exchange. Temple is sitting just right in front of the studios there. That's the trading floor, in case you're not aware, but that's where it is. Temple, good morning. I'm sure you have the T's and the dots crossed, ready for the show.
Yes, Bosin, good morning. Thanks for joining us here at the Nigerian Stock Exchange, where markets have actually resumed, and of course trading has resumed as well by the traders here on the floor of the NSE. As of last week, we saw a situation where investors, had more interest in equities. Basically, we saw a situation where the new policy of the central bank around the sterilization of some of the automobiles segment of the market, has now shifted attention to equities. Therefore, the 5-day bearish performance that we saw in the preceding period actually came to a halt. And of course, week to date, we settled higher, some 0.8%, which is positive, of course, for the key benchmark indices, which, of course, is still around the 26,000 psychological line. We saw over 10 billion naira added for that week to the equity capitalization of the exchange, and that's a plus as well to the market. Now, so if we look at the activity level, things were quite all right. The volume of transaction was 2.06 billion, valued at 18.43 billion naira, and of course, a total of 16,778 deals was recorded for the entire 5-day trading session. Now, let's go by the sectoral performance of the market. We saw the banking stocks actually doing so well because investors were more positive on the tier 1 names in the banking industry. Talk about Axis Bank, that recorded almost 18% gain week on week. FCMB, Zenith Bank, and of course Guarantee Trust Bank were key gainers for the week, and that was enough to actually push up the indices of that sector, which rose by 8.51%. Consumer goods was, however, negative by 5.91%. No thanks to Unilever and, of course, International Breweries and a couple of other brewers that you have under that segment, which have in recent time not been performing well. Industrial goods segment of the market was another area where we had the investors' performance. After investors' interest was heavy on that of on the banking sector, we saw investors moving in to the industrial segment of the market. Why? Because there was there's this merger deal now coming up between CCNN and Obu Cement, and of course that is something that traders and of course investors in the market have been able to examine and see that it is going to actually work out in their favor. So the bet on that, CCNN alone was up more than 10% for the week, and of course WAPCO was driven up by 5.05% specifically. Insurance side of the market, we saw Law Union and Rock really helping that sector for the greater part of last week. As a matter of fact, that seemed to be the highest gainer in the market for the entire week because Law Union and Rock was up by more than 31% last week only. And that contributed massively to the 43 basis points gain that we saw on the insurance segment of the market. Oil and gas was negative, 0.25% down. MRS suddenly moved, but to the southern territory. It was down last week, 9.7%. It moved just once, actually, for the week, and that impacted the market negatively. That's how we recorded the 25 basis points decline that we have in this segment. But generally, I should say that the equities market, given the gain that we saw last week, was able to moderate the losses that we've had in recent time in terms of the year-to-date performance now to 16.3%. However, investors are not too positive that that level of optimism that we saw in the market last week will continue this week. Quickly, with the energy segment of the market, which reflects the numbers that we had on Friday specifically, O&O was negative, bearish at by some 1.19%. We also saw a negative movement on Capital Oil, which is down by 4.83%. Now, the NASD OTC, very interesting. This market actually moved up. Positive this time, 0.36%. Of course, we saw the market, the NSI, which is the NAS, the securities index now, resuming at the 700 psychological mark. It's back to 701.76 points. The market capitalization was also positive, moved all the way from 502 billion to 504 billion. Volume of transaction, 26 million, valued at 44.94 million, and of course 29 deals was what we recorded for the entire sessions, 5 trading sessions of the week. We saw 6 out of the 39 securities tradable on that platform moving last week. Niger Delta Exploration Production Company was the highest gainer by value and of course volume of transactions for the greater part of the week. Now the fixed income side of the market, where we saw, on the bond side of things, yields, really declined last week. It was really surprising to a lot of the players in the market. We saw a situation where on Friday, volumes of transaction was really low as a result of the traction that market had gained, from the beginning of the week, Monday through to Thursday. Offshore institutions, we understand, were the net sellers for the period. Again, it looks like they were sensing illiquidity in the market and they began to move gradually out of the market. So, but we do know that traders are expecting some 406 billion naira inflows on OMO maturities this week. So perhaps that is an area that will also galvanize some performance for that segment of the market this week, including the treasury bill side of things, which is where our attention has been moved to right now. In treasury bills, we understand last week actually was muted due to the whole restrictions that the CBN has now placed on OMO auctions in the market. It has restricted some individuals and, of course, some banks, from that segment of the market. But we also know that the CBN has announced that it is going to key into the secondary side of the market so that they can drive up liquidity on that segment of the market. That's an area that we will actually wait to see how investors will react to today after the holiday as traders and, of course, treasurers of companies and banks, resume today, Bosun.
Thank you for taking us through those closing numbers so everyone has a very fair idea where we finished off last week. But again, back to the equities market, more specifically, and I pushed this out a few days ago. I just think about 3 days ago over the weekend. I think I got a bit more of my time on my hand on Saturday. So are we expecting, is anyone willing to hold out his or her feet to the fire and say we'll have a Santa Claus rally for 2019 on Customs Street? Temple, would you put your toe to the fire for a Santa Claus rally?
Well, I think that is going to happen. If we compare, we haven't seen that rally yet, though. But it is something that a lot of investors and traders are really hoping will certainly happen. Last year, the reason why we didn't really see so much of it actually happened. There was that rally, the Santa Claus rally actually played out in the market last year rather. But investors were too smart to actually take profits. So the higher the share prices of companies or stocks were going, the faster you saw investors, traders, grabbing those profits and moving out of the market. Again, because it was a period that preceded the general elections. The presidential election was around the corner, and that is something that really gives that gets investors to be risk averse in terms of investing in a market like this. So for that reason, if you count from December down to February when the election 2019 was actually to hold, it was just 3 months away. Therefore, for such a rally to be coming and you see the foreign offshore investors, taking profit. That was the reason why we didn't really get hold of that Santa Claus rally last year. But this year, of course, we know that there is no election in February. But we do know that there isn't anything to actually shake investors. The whole policy around restrictions of individuals and local players, from OMO auctions, that enough. Of course, has created a little bit of illiquidity, but we've seen positive responses from the central bank trying to manage the situation, even though we know that offshore investors have also, started becoming panicky about this particular development. However, now that we've seen investors moving back to the equities market, look at the prices of those banks. The share prices of these banks have now risen. We've seen some investors also taking profits immediately, but a lot of investors are still waiting for the rally that will come with the Santa Claus, the Christmas period, the festivity period, the tail end of the year. That way they know that their share prices would have ticked higher, and that will be an opportunity for them to even double their profits and possibly, sell down and wait again till when the prices go lower before they make re-entry.
Yes, Temple, perhaps, and I love the way you just put it because you just break it down because, as you rightly put it, yes, last year was penultimate 2019 general elections, so there were a little bit of concerns inside and outside the country about how things will go and all of that. So that we'll understand. But this year, she said, we don't have any election or major event in early 2020, at least not in Q1, on our calendar, on our radar for now. So everyone looks to be coasting home towards the end of the year. And perhaps what we saw last week is the beginning to what you call a gentle soft landing for the market. We've done about 16.3% negative since year started. How worse will it get? Perhaps we've seen the worst so far in the year. Perhaps this is the time for everyone to start rebalancing their portfolio, because it looks like the central bank is not blinking when it comes to these adjustments around the treasury bills, treasury bills management, liquidity management issues and all of that. So if that is the issue, then I think every portfolio manager, every fund manager, every investor in and outside the country would begin to go along this way. Of course, since technically the central bank chief, Godwin Emefiele, says some time ago there will be no interest rate tinkering until 2020. So we can take the MPC meeting coming in about a week or two from now and say, look, the MPC will do nothing. But again, they'll continue to use monetary policy tools to try and rebalance the market, like you said, shift a little bit of the weight onto the stock market where you are, a bit of it also maybe into the FMDQ with the bond, bankers' acceptances, commercial papers, those multi-billion offerings by Forte Oil, by Dangote Cement, by some of the banks that are there on FMDQ as well. So this rebalancing perhaps will help investors to say, look, we've done enough for the market, for the equities market. Maybe it's time to soft land a little bit, pick back a little bit of profit. But let's move on quickly because of time. When it comes to some of the news that we have, because news is part of what investors digest when you make entering into any market. Now we've seen this spate of boardroom shuffles, exit of non-executive directors, change of managing directors in the insurance sector. Even big banks such as EcoBank did one or two of that. So what does this tell you recently? Do you think investors are taking note? Should they take note?
Well, the shift we're seeing as well relates to the notes that investors are currently taking. Because, again, if you look at the rejigging, we've seen a situation where some of these directors who are also investors and shareholders at the same time have been on the boards of these companies for a while. I mean, talk about the Omolua B Savings and Loan. The managing director and chief executive has been there since 2015 and, of course, has to now retire and leave. He resigned and, of course, he left. Now we understand there's a new investor coming on board. This explains the reason why we saw some transactions on that particular company a few weeks ago, some 2-3 weeks ago, but that didn't change the price. That explains a kind of buy and sell side, which comes the balance for that period. And if you also look at Global Spectrum, we understand that Major Stanley Dikangada, has also resigned. He's been there for 7 years. At a period of a while ago, some 3 weeks ago as well, we saw some transactions, cross-dealing on this particular company in a way. And of course, that speaks to the fact that the non-executive director has taken his leave and a new investor is perhaps coming on board, which has not been announced. By the time that announcement comes on board, it will also explain what has actually transpired within that period. In the insurance space, we have seen a lot of this as well. Law Union and Rock last week talked about some of the investors, some of the management staff, in this case now, who had to resign. The head of internal audit, and of course the chief compliance officer. I think the head of internal audits resignation will take effect from 15th, which is in 2 days' time or 3 days' time. And that of the compliance officer has already taken effect from yesterday. So it means we should expect some other folks coming on board. And perhaps these folks are actually representatives of some interest on the board of that company. We're not so clear about that, though. But we know that because of the recapitalization exercise going on in that insurance space, there will be so much of re-entry and, of course, exit on the boards of these companies. And that will translate to some kind of investments, some kind of transactions, whether in the secondary market here or by any other means, by identification of those investors. That's basically what we think has been happening. For EcoBank, of course, that seems to be the last one that we saw on Friday before the break came on board. We saw the appointment of Mr. Deepak Malik, who is now replacing Manish Dutt. Of course, it is new investment. These folks have also, Mr. Dutt, or Mr. Malik rather, would have been on that board for some time. and it's time for him to leave, perhaps for some kind of rebalancing of portfolio, or basically to just go after his interest in some other companies. And then we have this new man who is coming on board to actually take his place. So it's a continuous thing. Of course, confidence of some minority investors on these guys will also drive up traction for the share price of those companies, because again, you know, they will want to bring their followers on board and perhaps participate in the market via the secondary markets.
Yes, of course, Temple, the Deepak Malik joining Ecobank Transnational ETI, listed in Lagos, Abidjan, and Ghana stock exchanges, was representing, is a nominee of Arise BV, which holds 14.1% equity stake in Ecobank Transnational. Yeah. So that's putting their man where their mouth is and where their money is. That's the best way to do it. I have 14.1% interest in you. I'll put my man in there to ensure that my interest is well protected. That's the way it goes in the world of business and capitalism. Thank you so much, Temple. Sure. We appreciate teeing off today's trading day and the business day for us. We'll talk about the commodities market when we come back. We're checking in with the price of rice with FDC. Inflation data will be out this week on Thursday. FDC, Financial Derivatives Company, is forecasting an uptick to 11.6%. Temitope Lubile is joining us in 2 minutes.